Good evening, this is Ken Long from Tortoise Capital with a quick review of some key concepts we developed today during the live trading workshop. Just want to give you some highlights. First thing I want to cover is a thing we call the Z3po, and that stands for the Z3, the third Bollinger Band pinch. So we're tracking price action with 30-period Bollinger Bands. +1, -1 is the river, +2 or -2 is the floodplain, +3 or -3 is this outer thick red band that we look at as being a crucial price area. So one of the things we noticed in the sideways quiet channels around lunchtime that we get a Bollinger Band pinch, and it's very clear to see that when the thick red lines pinch down to a location tighter than they've been before, and we've been in a sideways quiet channel where the slope of the 30-period moving average, or the slope of the river, is flat, and then you get this maximum pinch. And then as price starts to move away from the Bollinger Band for the breakout, you start to get a range expansion, so the Bollinger Bands start to flare. So we're calling that moment the Z3po. And our technique is to put a box between the Z+3 and the Z-3. Call that the pinch box. When that pinch is tight, it's not unusual to see that smaller than the frog box, which now gives us a way to distinguish between signal and noise. So what we've been doing is putting that box on, and then drawing horizontal lines across the chart at the Z+0, 1, 2, and 3, and -1, -2, and -3. We've been buying the breakouts from Z-3 and look to get our stop either from Z +2 or +1 or below the Bollinger Band mean, wherever you've decided to place that, to get that to no lose and dinner for two as quickly as possible. My sense is that when this is as tight as 1/3 of a frog box, you can afford to use the whole frog box as the risk, and then when you get a chance to move it up to no lose plus dinner for two, you do so. If you get a reversal from outside of that risk box and back in, you either scratch the trade or you can wait for the D+2 to trigger and then stop and reverse. And now failed breakouts, what you're doing is playing for a move to the far side of the risk channel, which then gives you something like a 2.5 to 1 typical reward to risk just to get to the edge of the risk box. Works both directions. It is not unusual to see two full frog boxes available to the north side or the south side, so we have the opportunity for this to really unfold well after a typical move in the first half of the day. We saw some examples today on 9 June that we traded where this pinch box got as tight as a quarter of a frog box and set up some interesting trade frames. The next thing we want to talk about is how to add value to this, I think, and that is a daily range compression ranking. So if we had something like today's range at the close, the range divided by the average range, if they were perfectly equal, that number would be 1.0. We'd say the range is equal to the average range. If that number is greater than 1.0, you had a range expansion day, and that means you're starting to see trending behavior in the direction of the range expansion, indicating trading interest being tipped towards the buyers or sellers, depending on which direction the range expansion finished up for the day. If it's less than 1.0, then you're having range compression, which is what you like, and then this becomes a good candidate for daily breakouts using either swing trading or that Z3po that we looked at. So suppose in case number 2, you had a sideways quiet channel on a daily chart where you had some volatility and then it quieted into a sideways quiet channel and you got a pinch on the daily bars. We call that a daily Z3 compression. Then when you get an intraday Z3po, it should be especially powerful. Now, if you put all three of these together, that should be the best of all possible worlds, a stacked compression day in which you have a compressed range day as the tail end of this daily Z3po, and then intraday it compresses further on intraday charts, usually 3 minutes or 1 minute, into a very tight sideways quiet channel. That breakout has a lot of energy coiled into it that should be good. Here's another way to look at that, a rule of thumb, that if the daily chart is on an SQC and yesterday is a compressed range, that is great, and what you're looking for intraday as a rule of thumb is to have a frog box drawn on your chart and then look for that Z3 pinch, and then by visual inspection, if that's less than the frog box, you put them both astride the flat Bollinger Band mean, and what you're looking for is a breakout in either direction, and that should be awesome. It was today, and I expect it to be a robust idea. It's a way to further improve pattern 5. The other good idea we had today was the concept of the rangestat fade, and so if you had the low of the day here and you got an outstanding rangestat move, that triggers an alert. And what we're looking for is a reversion to the mean. Only 1 day out of 6 even gets to the rangestat and beyond. So if it gets to that level, the likelihood that you're going to have a fade or a reversion to the mean intraday, in my view, is greater. And so what we're looking for is the beginning of that reversion to occur, and then looking for a way to get short. So the alert is that it has moved a rangestat. A refinement is if it's moved an average range, it's already in the upper half in terms of size of daily range, and so that might be trigger 1. Trigger alert number 2 being it has moved a rangestat, and now we're looking to, our first idea was just hang a frog box from the high of the day, and now by mathematics you're going to have a 2 to 3 frog box move back towards the low of the day, so you could get short if it moves a full frog box against it. You might have take notice of a VWAP or an RL270 as an intermediate target. You might look for a 50% retracement of that move to the rangestat as being target 1, or maybe a frog box. Target 2 being certainly 2 frog boxes from the high, and then a return back to the open as target number 3. Also, this line here could be, it could be price, it could be the RL10, it might be the smoothed RL30, and you're looking for the RL30 to get to the 12 o'clock position and for it to begin to fade. By that point, you certainly have to be looking for RLCOs coming the other way. RLCO would happen before it got to the 12 o'clock position, but that might be your final waiting point. And now for some optional ideas for entry, I am considering hanging half a frog box from the top, reasoning that after a full rangestat move in one direction, it's not as likely to go a complete rangestat in the other way. I think there would be too much signal in there. So getting started with half a frog box might get you in earlier. If you're plotting that 10-period Bollinger Band dragon, I'm thinking either the first penetration or the second penetration of the south edge of that dragon might be a way to get you in even sooner than a full or half a frog box. You may also might be looking at a 1, 2, 3 pattern or an RLCO pattern entry. Think of that as a Xeno entry. That the same place that you would cash a profit from a rangestat move might be the place where you're immediately stopping and reversing and looking for this retracement. Maybe you put half on there and then look to add a half after it's moved full frog box. Target of the Bollinger Band mean 30, but certainly the VWAP and these other targets 1, 2, and 3 should be very effective. We had some success with that today, and I'll be looking for more of that in the future. I think even after an average range, if it starts to roll over and the rest of the market is weak, that might be a way to get some more, less quality I think, but more opportunities. And this is a mirror image trade. My preference is to do it with fades after up moves, because that's easier to believe. People want to let go of the trade so they can retain their profits, but even working the other way should be effective as well. So it's Ken Long from Tortoise Capital with a quick update from the live trading workshop and some of our good ideas from today. Keep your risk measured and your powder dry. exactly 10 minutes. That was awesome.